Hello everybody, welcome back to another Market Dash video, and today in this video I'm going to be going over potentially one of the most overvalued companies in the entire stock market right now. So with that being said, let's get into what this company is. They also just recently reported earnings, so let's get into that earnings report and then let's talk about the entire fundamentals plus how the valuation is actually looking for this company. So let's first get into what this company is. Take a look here. The company is going to be Palantir stock, and they just had their earnings report just yesterday after the bell. As we can see here, the stock is down about 8%, so the stock did not react very well. But looking at year to date, the stock's up 145%. The past 5 years, this stock is insane, up 1600 plus percent. So this stock has been doing insanely well. However, I do think that this company could be the most overvalued stock right now. If we go over and take a look at the PE for this company, let's take a look at Palantir's PE. Going over here, it is higher than the median. Looking at the past, it is at 589 PE ratio right now. Normally, it was trading at around 100 to 200, but now it's at 500. That's an insanely high PE ratio. That means you're paying over $500 for $1 of earnings per share. So you're paying such a high premium for this company. And on average, the stock market trades at about a 20 to 25. So this is trading at nearly 20x the market. But keep in mind, this company is growing faster than the stock market. This company is growing at nearly 60% revenue. So if we compare that to the average company in the stock market average company has about a 10% revenue growth. I'd say 6 to 10% revenue growth. So in terms of that, technically the valuation still seems high because the valuation is about 20 times the market, while the revenue growth is only about 10 times the market. So with that being said, that could be a concern for me. Also, if we take a look at the price to sales, this is some uncharted territory for a company. 130 times the price to sales. That is insanely high. This is one of the highest in history. So this is a very high valuation for this company, and just be careful about that. That's what I have to say. So taking a look here at what Palantir does, as we can see, Palantir is a software company that specializes in big data analytics, building platforms that help organizations integrate, manage, and analyze vast amounts of data. It's best known for its work with the government and defense agencies to solve complex data challenges, but they've also started to serve commercial clients in the industries like healthcare, finance, and manufacturing. So the core function of Palantir software is to allow users to unify disparate data sources into a single view. Also, their clientele, the company works with a wide range of clients, including the US government, like the FBI, IRS, and Department of Defense, plus some commercial businesses. Taking a look at some of their products, the main product is going to be Palantir Gotham, which is their primary focus is defense and intelligence, which this is mainly for the military, CIA, and FBI. So this is used for counterterrorism, law enforcement, and military intelligence. Also, we have Palantir Foundry, which is an enterprise operations for commercial businesses and civil government, which is used to help companies model their operations, basically optimize their business. Also, we have the product of artificial intelligence platform, which the primarily focus is next gen AI, which is both for commercial and government. So they're also getting into AI, which some people may see this as an AI bubble due to the fact that this company is trading at such a high valuation, but the fundamentals do kind of match it. As we can see with this recent earnings report, this earnings report was amazing. Revenue of 1.18 billion compared to 1.09 billion expected. That's 63% year over year growth. So that's insanely good. They also beat forecasts of adjusted EPS, 21 cents versus 17 cents. Also record high operating margin, and the GAAP EPS was really good too. So taking a look at what the key business drivers of this recent earnings was the US commercial momentum, which the revenue soared 121% year over year, with the US commercial business is now the largest segment, surpassing the US government business. So commercial is really helping Palantir continue to grow at a faster rate. Also, the government business did see some great growth at 52%. So almost everything about this company is growing insanely fast. Also, the deal flow, which is how much their contracts are, which they closed a record $2.76 billion in total contract value, up 151% year over year, which included 204 deals of at least $1 million. plus the AI platform demand. Management emphasized that their AI platform is seeing robust demand. Plus, they updated their guidance, which is huge for this company. Palantir rates its full 2025 guidance. Full year revenue raised to approximately 4.4 billion, up from 4.14 to 4.15, representing about a 53% year-over-year growth rate. So this company is continuing to grow at 50 or so percent, and also their quarter four revenue projected to be about 1.33 billion, representing a 61% year-over-year growth rate. So this company is growing at an insanely fast rate. So this looks very good for Palantir. This company is just such a great growing company. But if we go over to the valuation here, we get an intrinsic value of $5 on the Market Dash website. Do I think that the intrinsic value is $5? I don't believe that. I think this company honestly should be worth about $200 billion, $100 billion market cap. So I could see this company being a potentially $100 stock, maybe a little less. I'd say $70 to $100. But at 190, I just think this company is insanely high. So that's just what I believe. But I still honestly believe this company could be around $100. So I think this intrinsic value is insanely low compared to what I personally believe. So keep that in mind. And if we take a look at their recent investor presentation here, we can see the rule of 40 for enterprise software companies with at least $1 billion in trailing 12-month revenue. As we can see here, this company Palantir is just a standout company with, in terms of their operating margins plus their revenue growth, we can see this is just insanely high. The only thing that's near this company is FICO, and this is just insane with this company. Also here we have the rule of 40 with the top 25 market cap companies. The only thing that's near is Nvidia. So this company just looks insane with their fundamentals, which I've said the fundamentals look insanely good. So the fundamentals of this company are very good. It's just, is the valuation good? That's the problem here. Even though this earnings, look at these earnings, insane growth. US revenue 77%, US commercial revenue 121%, US government revenue 52%. Everything's growing insanely fast. So this company's a great company. It's growing insanely fast. But like I said, once again, this intrinsic value calculation here, $5, has me worried, and just all the other metrics about this company has me worried about the future of this stock. Because looking at the price to free cash flow here, also a very high. Everything is just very high for this company in terms of valuation. So that's why I think you should be careful. But that's just what I believe with Palantir. I think it is a pretty overvalued stock. Would I say it's the most overvalued? Potentially not, but I would say I would be worried, a little bit worried about this company. Just be careful, I would say. So thank you guys for watching this video on Palantir, which could be potentially the most overvalued stock. If you want to get recent news and updates from marketdash.io, just go over and sign up with their email, and you can get recent news and updates in the stock market and for marketdash.io. So thank you guys for watching. See ya.